It is January 14th, 2026. Margaret, now 72, settles into her chair at the kitchen table holding a warm cup of coffee. She taps open her banking app. She has been anticipating this deposit for weeks. She saw the headlines everywhere. Social Security confirmed a 2.8% increase. She even worked out the numbers herself using a scrap piece of paper. She expected roughly $56 more this month, but the moment she sees the amount on the screen, her stomach drops. The payment arrived, but it is far lower than what she estimated. Much lower. She checks the numbers again. She refreshes the app once more. She starts wondering if Social Security made an error. She wonders whether the bank charged some kind of hidden fee. She even wonders if somebody somehow took part of her payment. What Margaret does not realize is this: nobody stole anything. There was no error. A brand new deduction was taken from her payment before the money ever reached her account. And if you receive Social Security as a senior citizen, this exact situation is about to affect you too. Hello, my friend. My name is June. I work as a senior policy analyst, and for many years I have helped retirees like you understand government rules that are rarely explained in simple language. First, I want you to stay calm. You are not in trouble. You did absolutely nothing wrong. But you do need to understand what is happening to your January 2026 Social Security payment because a new Medicare deduction is quietly reducing your increase. And for some retirees, depending on what your income looked like 2 years earlier, that deduction could become 4 or even 5 times larger than the standard amount. During the next few minutes, I am going to explain 3 important things. First, the precise rule and the exact amount being taken out of your payment. Second, the hidden trap that catches even retirees who are extremely careful with money. And third, the official paperwork and actions you can take immediately to protect yourself. Please stay with me all the way to the end. There is one error, specifically mistake number 4, that I watch seniors make every single year. It can end up costing you more than $900 annually for the remainder of your retirement. I truly do not want that happening to you. Let me introduce you to Robert. Robert is 67 years old. He retired last year after spending 32 years at the same job. He is organized, he is cautious. Every Sunday after church, he sits down and balances his checkbook. His wife died 2 years ago, so now it is only him and his rescue dog Buddy living together in a modest home in Ohio. Back in 2024, Robert made a decision millions of retirees eventually make. He sold the family house where he raised his children and moved into a smaller home. After paying expenses, he ended up with a one-time gain of approximately $60,000. He paid the taxes he owed. He felt relieved. He believed his retirement was secure. Then, during November of 2025, Robert received a letter from Social Security. The notice explained that his Medicare Part B premium for 2026 would not remain at the normal $22.90 amount. Instead, it would rise to $45.80. Robert reread the letter again and again. He thought surely there had to be some kind of mistake. He called Social Security and remained on hold for almost 2 hours. Eventually, the representative explained politely but clearly that because Robert's 2024 tax return showed income above $137,000 after including the home sale, he had been placed into a higher IRMAA bracket. That stands for Income-Related Monthly Adjustment Amount. And because of it, Robert would pay over $2,400 in extra Medicare premiums during 2026. Robert felt crushed. Selling the home was only a one-time financial event. His retirement income had already returned to normal levels, but the system was relying on tax information from 2 years earlier. Here is the worst part. There was actually a form Robert could have submitted, a document called SSA 44. That form might have lowered or even completely removed the surcharge, yet nobody mentioned it to him, not his accountant, not the real estate professional who handled the sale, not even the first Social Security employee he spoke with. Please do not become Robert. Let me explain exactly what is happening and exactly how you can protect yourself. I want to walk through this carefully and slowly. I am going to give you the precise numbers directly from the Social Security Administration and Medicare.gov. No speculation, no gossip, no rumors, only facts. First, the increase you were told about. On October 24, 2025, the Social Security Administration officially confirmed a 2.8% cost of living adjustment for 2026. For the average retired worker, monthly benefits rise from $2,015 to $2,071. That works out to roughly an extra $56 every month. That sounds encouraging, but it is not the amount that actually reaches your checking account. Here is the hidden deduction most retirees never fully understand. Medicare. Part B, the portion that covers outpatient care and doctor visits, gets deducted from your Social Security payment before the money ever arrives at your bank. In 2025, the standard deduction was $185 per month. In 2026, it increases to $22.90. That equals an additional $17.90 every month. It is a 9.7% increase, making it the second largest dollar jump in Medicare history. So let us calculate the real numbers together. Your Social Security increase plus $56, your Medicare Part B increase minus $17.90, your actual net increase approximately $38 monthly. That is the smaller amount Margaret saw in her account. That is why the deposit looked far lower than she expected. But what about the Hold Harmless rule? You may have heard people mention the Hold Harmless provision. This is an actual federal protection written into Section 1839F of the Social Security Act. The law says your Part B premium increase cannot exceed the dollar increase in your Social Security benefit. Sounds reassuring, correct? Here's the catch. In 2026, the Hold Harmless rule only protects retirees whose Social Security payment is $639 monthly or less. Anyone above that amount, which includes the overwhelming majority of seniors, receives no protection from this rule, and the rule provides zero protection if you belong to any of these four categories. If you are enrolling in Medicare for the first time during 2026, if you pay your Part B premium directly through quarterly billing instead of automatic deduction from Social Security, if you are subject to IRMAA because your income was higher, or if your premium is paid by the state through a Medicare savings program. Now let us discuss IRMAA, the rule that blindsided Robert. IRMAA examines your tax return from 2 years earlier. That means your 2026 Medicare premium is based on the income you reported to the IRS in 2024. If you were single and earned more than $19,000 during 2024, or married and earned above $218,000, your Part B premium increases dramatically. It can rise from $22.90 to $28,410 to $45.80 to $527.50 to $64,920, and eventually all the way to $689.90 each month. An IRMAA surcharge also affects your Part D prescription drug coverage, adding anywhere from $14.50 to $91 extra every month on top of your regular drug plan premium. And here is the truly painful part. IRMAA works like a cliff, not a gradual slope. If your income crosses into the next bracket by even a single dollar, your premium could jump more than $80 monthly. That equals more than $970 yearly because of just one additional dollar in income. Now let us quickly review 3 other important 2026 numbers you should know. The annual Part B deductible is now $283. The Part A hospital deductible has increased to $1,736 per benefit period, and the Part D out-of-pocket prescription cap moved from $2,000 in 2025 to $2,100 in 2026. These are not estimates or internet rumors. These numbers come directly from CMS publication 11579 and the official 2026 Medicare and You Handbook. Now here's exactly what I want you to do. Not sometime later, not next month, this week. These next 3 steps could potentially save you hundreds or even thousands of dollars. Step 1, get your benefit verification letter immediately. Sign into your account at ssa.gov/myaccount. If you have never created an account before, you can set one up for free using a valid identification document. Once you are logged in, request your benefit verification letter. That document will show the exact breakdown of your January 2026 payment, including your full benefit amount, your Part B deduction, any Part D deduction, any IRMAA surcharge, and the final amount deposited into your bank account. If something appears incorrect, you will have written proof and can respond immediately. Step 2. If you experienced a temporary spike in income, submit Form SSA 44. This is the form Robert never knew existed. If your 2024 income was unusually high because of what Social Security calls a life-changing event, you can ask them to recalculate your IRMAA amount. Social Security recognizes 8 qualifying events: marriage, divorce or annulment, death of a spouse, stopping work, reduction in work hours, loss of income-producing property, loss of pension income, or receiving a one-time employer settlement payment. Visit ssa.gov/form ssa-44.pdf. Download the paperwork, complete it, attach any supporting documentation, then either mail it or take it directly to your local Social Security office. And if you already received an IRMAA notice you disagree with, file Form SSA-561-U2, called the Request for Reconsideration, within 60 days after receiving the notice. Do not allow that deadline to expire. Step 3. Find out whether you qualify for a Medicare savings program. If your income falls on the lower side, your state may completely pay your Part B premium through programs like QMB, SLMB, or QI. There is also a program called Extra Help that can eliminate your Part D deductible and sharply reduce prescription copays. Countless retirees qualify for these programs, but never apply simply because nobody informed them they existed. Call your state health insurance assistance program, often referred to as SHIP, and ask about eligibility. Their assistance is completely free. My friend, I need you to listen carefully. The rules changed in 2026. They will change again in 2027, and they will continue changing after that. The government does not send every retiree a personalized warning letter. Television news does not always explain what truly affects your benefit payment, your premium costs, or your retirement income. And YouTube does not always place my videos in front of you. The algorithm chooses who sees what. So if you depend only on YouTube notifications, there is a very real chance you will miss the next important update. And the next update could be even more significant than this one. That is why I created the Global Senior Alerts official WhatsApp channel. Click the link in the description box directly beneath this video. When you join, you immediately receive 2 things. First, a free copy of my Senior Benefits Protection Guide. Inside, you will find the exact forms I discussed today, the IRMAA income chart, Social Security contact phone numbers, and a yearly January checklist you can use whenever your benefits change. Second, instant alerts whenever something important happens. New Social Security rules, Medicare updates, banking withdrawal changes, insurance claim developments, pension tax revisions, TSA, travel policy changes for seniors. The moment something important changes, you will know. It is free, it is private, and it may save you thousands of dollars. Before you leave, if this video helped you today, please press the thumbs up button. Share this with one friend, one relative, or one neighbor who receives Social Security, because every senior in America deserves to understand what is being deducted from their payment before the money reaches their account. This is June reminding you that knowledge is your protection, and you never have to face these changes alone. I will see you in the next video. Stay safe and stay informed.